Hello, this is a follow up for our trade ideas, the one provided in Forex Live on it was Wednesday night New York time, so Thursday 6 a.m. GMT plus 2. And the trade idea was to enter at 23K, which is right here, this line. So it was over here on this day, on the 19th of July, US time, as we are here on US time as well. And price shot up to stop out the people that didn't have distant enough stops. Uh, Not in our trade idea. It just came super close to us. Uh, and we had a good stop. It was a little bit lucky. We could have been stopped out, um, and we could have made it a little bit more distant for next time. And basically, what happened here, if you look at these two lows, which a lot are looking at, in this high, there's a lot of algos and traders that are uh, illustrating or drawing this channel. And there's a few attempts here to stop out the people that had stops just above that. So people that were going short but had close stops, or to trap uh, the people that thought that this is breaking out to the upside. But that was all a bit of a fake out. And as we thought, price was going down, it was exhausted. And after big ranges, many times, big drops, then we have usually trading ranges, which we may get here. So necessarily, the price is not just going to shoot up. Okay, we don't know a lot of times when it's going to be the next high of the range, but we're looking for that range. And here we also found it. So uh, the next item on this video update becomes, now that we're profitable on the trade, but we see new information. And in this case, we see this black line, which is the 20 EMA, and we're on the very popular daily time frame. And we have high belief that some short sellers that are profitable, like us at this stage, are going to take partial profit around this area. And you have not only the EMA 20, you also have this high, and you have also this low. This is the candle of 19th of July. This is the high of 17th of July. And price and assets like to poke around. They like to stop people that put their stops in sort of clear, visible places. And the low of this candle on the 19th of June is one of them. There's people that went long, and this is where their stops is. Also because of the high of 17th of July and the low of 19th of July, which is at 21,578.57. Okay, so very close to the 21 and a half semi-round number, which is also a bit of a magnet, and people like to put stops in that area. So currently, we have a situation where we would like to mitigate our risk. And here's a way to look at that. So from our entry, which is the 23K, then if we get out at 21,750 approximately, which is 5.4% to our favor. So we went short, we would be up 5.4% on our trade. This is excluding leverage. Many times the common leverage would be at least 5. So we would be up more than we would be up 27 percent on that 5.4. But for this purpose of calculating our new stop, then it's 5.4. So we would want to take one third off the position, meaning to, in this case, buy to cover and to reduce our size, our position size, by one third, which leaves two thirds of the position still in play. So if we want to set a new updated stop, then we need to take half because we're taking one third out at 5.4% profit. We want to take the two thirds at half of that, which equals in total break even or zero, excluding fees. So for the next two thirds, we're looking at 2.7, which is about here, okay? And this is the new stop. Okay, we would be updating our new stop to 23,620 on the two thirds of the position still running. And we would be removing the previous stop, which was 24,375, because if we get there and we would have won or profited on the first third, but lost on the other two thirds running, then the total would still be a loss. That's what we want to achieve right now. Now, as we do that, we also have to look at the implications technically. Does it make sense? Okay, so for example, if that stop would have been just an example, just here, then it wouldn't make so much sense because that's too soon above the high of the current candle of the 23rd, which is 23,006. And that would be too close and too fragile for us being stopped out. At this stage, being here, it's not the most ideal stop. Again, we do pay a price. There is a trade-off, but at least we are above this area that's closed and show that there's a lot of sellers here. It's the high of the 21st. It's the open of the 20th. It's the close of the 19th. That close is more important than the overshoot of the high. So we are still above that area of 23,400, which gives us some indication of stronger sellers there to break that, we'll call it internal resistance or midterm resistance is also something that price would attract some new bulls or some new strength in order to break that up. So in any case, also we have to also in this case that we want to uh, um, set our trade to break even, and we see this. We have more confidence in this area, the 20 EMA, and these lows of being places where price would temporarily jump up. So we give this more weight. We have to live with the new stop, which is still okay. Okay, so in summary, we are lowering our stop from the original trade idea stop at 24,375. We're lowering it to 23,620. We will be getting out for a third of position here at the 20 EMA, which is about 21,750 or so, and letting the two thirds ride on the next TP is also the same take profit as originally we've had in the trade idea 20,250, and we have another aspiring one. It was quite low at 16,545, and this goes back to the explanation with the bearish move that you can see. You can type in Bitcoin technical analysis, measured move, you'll find Forex Live on Google News or Google web searches, and you can check out the explanation about that. So the final take profit is quite aspiring, and it's going on the fact that we might have a measured move all the way down from this break of this support line and this bear flag to another continued expected move down. We'll see about that, but the fact that we're continuing, we're separating our take profits to three scenarios increases the chances of us profiting. And as you see now here, we're also being dynamic with our stops according to things. In this case, something that we did not see in the beginning, but it's okay to, if you see it, you still have time to adjust. Thank you. Have a good week.